Good day, everyone. Garrett here with More Financial Management. Received a question yesterday from a client about how everything going on with Israel and Palestine might affect their portfolio. So I wanted to go ahead and share that with everybody. It's a good question. It's probably on everybody's mind. So let's jump right in. The first thing that I want to point out here is that the following charts that I'm going to share relate to direct involvement, direct invasions and conflicts of the U.S. military. So obviously we're not quite there yet when it comes to Israel and Palestine. I don't think anybody has any idea whether or not that's coming. So the way that I want you to look at this is a possible worst case scenario, okay? This first chart represents the U.S. stock market as measured by the S&P 500, again, during times of direct U.S. military involvement. So each gray line represents the stock market's performance after each historical conflict. Okay, the blue line is the average. So what I want your takeaway to be on this one is that the stock market is surprisingly resilient. That blue line points out the fact that over the following 24 months after a military conflict, the stock market's performance is positive. Okay, so the market is surprisingly resilient when it comes to times of conflict, not nearly as bad as you might believe. This next chart compares the performance of the two main investment classes, stocks and bonds, both during times of peace and during times of, again, direct U.S. military conflicts. All right, so we just talked about the right side, which is U.S. stocks, but I want to draw your attention to the left side, which is bonds. So with red being the wartime portion of this comparison, you can see that the return of U.S. bonds actually becomes negative. All right, so let's talk about why that is. This next chart shows us inflation, okay, both during peacetime and during wartime. You can see that wartime inflation is about twice as high as peacetime inflation. This is largely the result of two things. One is that the government has to spend a lot of money and pump a lot of money into our economy through our defense contractors so that they can buy supplies for war. That is naturally inflationary. Another thing that can happen is that the U.S. government needs to borrow money in order to fund those purchases, which can also be inflationary. You combine those two things and you wind up with the chart that you're looking at right now. So that actually ties back to the bond portion. So anytime you have high inflation, bonds tend to get hurt, which is what we've seen over the past couple of years anyway. But one of the most affected bonds is what's known as a long-dated bond. In this case, a 10-year treasury, according to this chart, is what gets hurt the most anytime inflation exceeds 4%, which is above the historical norm. All right, so let's talk about the takeaways here. One is, my hope is that if you know what to expect, you're not going to be as surprised by it. Again, this is all a worst case scenario here. We have no idea if we're going to wind up in that position or not, but my hope is that if you know what may be coming, you're not going to be shocked if it does occur. Two is the importance of diversification. So the good news here is that I do not place an abnormally large amount of money in any client's portfolio in those long-dated bonds. Again, it's just prudent to spread your money out such that you're going to be okay no matter what happens. Third, the importance of avoiding drastic and knee-jerk portfolio changes. those almost never wind up being to your benefit. And this is certainly one of the situations where we need to be cognizant of that and do our best to avoid them. As such, you're not going to see me make drastic changes to your portfolio as a result of the Israel and Palestine conflict. With that being said, if you would like to talk specifics about how this pertains to you and your portfolio, I am more than happy to do that. Please don't hesitate to reach out and just let me know if you have any questions whatsoever. I appreciate you all. Thank you for your time today.